So, Zach, thank you so much for joining us today for this conversation. I get a lot of questions from Create campaigners who are very ambitious. They see themselves owning a number of LLCs and do have the question about the best ways to organize them. So I appreciate you being able to shed some light for our viewers and also for myself.
Sure.
So we're just going to jump right into the questions, Zach.
Okay.
And the first one I'm going to ask you is, what is a parent LLC, or even sometimes they're called umbrella LLCs or holding companies? What is it?
It is a way to own different LLCs all under one company. So you would, I mean, the easiest example is I start a Zach Parent Company LLC. Zach Parent Company LLC then starts two other companies that it owns. So you have the probably the most common example of where they're used is if you own real estate, you can own it in one LLC. And if you have a manufacturing operation, you can have it in a separate LLC. So by keeping those separate, if there's liability that arises in your manufacturing LLC, the LLC is the real estate itself is owned by a different LLC. So it protects your ownership of that real estate and gives you kind of some additional liability shields. So each LLC will be responsible for whatever it owns, but by putting them into separate LLCs, you can really shield the liability and protect yourself a lot. The parent LLC becomes the owner of all of them, and it's really just for simplicity of wrapping everything up and owning it all in one place instead of you having to own, 10 different LLCs.
So, Zach, I want to stay here for just a second, just for complete clarity.
Yeah.
So
Yeah.
let's say I'm gonna take your example and we'll put it in a way I can understand it. So I have a for-profit graphic design company, and that is an LLC.
Mhm.
But maybe I also want to have a leadership training company, and I'm going to set that up in another LLC. And then one last thing, I kind of like publishing books. So I want to have a book publishing company, and that would be a third LLC. Are you saying that I could create one parent LLC that then brings these three, the graphic design, the other two companies under it, and I would really be managing the legalities, the liabilities, the responsibilities from that parent LLC?
Each one of them would have their own liability. So there's two ways that you could. So there in that situation, you have three LLCs. You can either own them individually. So Christina is the owner of LLC 1, LLC 2, LLC 3, or you can have it that Christina owns Christina Parent Company, and then Christina Parent Company owns LLC 1, LLC 2, LLC 3. If there's only one owner, it doesn't make that much of a difference because for tax purposes, those are considered disregarded entities. So everything that happens in the company flows through on your tax return. But let's say that you and I both own the company. If you and I both own three companies, we have three companies that have to file partnership returns and issue K1s. If we put that into a parent company that we both own, then it will have three single member disregarded entities, so you only have to do one tax return.
That is very interesting.
Yep.
So let's say
single member doesn't really matter, but for multi-member, it can make a pretty big difference on the administrative tax burden side.
that is very interesting, Zach. Can you share then? I get this question as well. Well, what if I already started? Let's keep with the example of three companies. So LLC 1, LLC 2, LLC 3. I already started LLC 1 and LLC 2, and I've decided I do want to go ahead and start a parent LLC. Can you do that after the fact?
Yep. Yep. So as of now, you own those two LLCs. In order to create that parent or umbrella or holding company, after the fact, you would create that new entity, and then you would transfer your ownership interest in those three companies to the parent company. So on your organizational chart of who owns what, it would be Christina owns this company, parent company, and parent company owns LLC 1, LLC 2, LLC 3. So Christina would only own one company, but the company she owns three other companies.
Very, very good. So is it easier then, even though you can in that example set up your parent LLC after you already have some LLCs, but Zach, is it easier to kind of have some foresight in mind and maybe set up the parent at the outset before you set up any smaller LLCs?
Yeah, I think it is certainly easier to do it at the beginning. It's not that hard to transfer it into that structure later on, but there's a little bit of an accounting adjustment that you have to do in changing some of the paperwork, especially if it's a situation where there's multiple owners of those LLCs. Then until you form that parent company, each LLC is going to have to do its own tax filing. So the sooner you do that, the better. But it also matters if it's the same owners, because that's one thing. I mean, you kind of have to have the same owners of all of the structure. So the owners of that parent company are all going to own all of those subsidiary companies the same way. So if you and I own a company, and you and Jonathan own a company, and you and someone else own a third company, then the parent company doesn't really work there. So it's more where the ownership is the same.
That's a good point. This is good knowledge, you guys. Take notes. All right, so let me throw one more scenario at you then as well. To kind of follow up on my last question, if I decide from the beginning that I do want to have a parent company, then do I need to have that first, besides my parent company, do I need to have my first LLC thought about as well?
Yeah. I mean, the parent LLC is basically the exact same as any other LLC, except when you structure it, it'll end up being that you have a parent company that doesn't actually do anything other than own other companies. You can have a parent company that you own that then invests in other people's LLCs. So your parent company owns a 25% interest in this person's LLC and a 30% interest in this person's LLC. So the ownership of the subsidiary companies can be different, but the ownership of the parent company has to be the same.
Okay. All right. I follow that. That's for those who want to use your companies to invest and get ownership in other companies.
Mm-hmm. Yep.
All right.
Partner with other people or invest with other people. Yep.
Okay. Thanks for clarifying that for me. So
what I should be doing is drawing pictures.
It's okay.
It's the only way to really understand these.
Sometimes we do need some visuals. Well, we did go diving right into different scenarios, but let's take a step back and just kind of explain for me, what are some instances that people would want to even consider having a parent LLC?
The most common one is trying to separate your real estate and assets from whatever activity you're doing that exposes you to liability. So like a manufacturing company with big machines where it's entirely possible for somebody to get hurt, fall, whatever, that could expose you to liability. If that company that has that liability owns all of the company's assets, then you could lose everything with one accident. If you split the assets into a different company and do the risky activity in one LLC, own the assets in another LLC, and then just have a lease agreement between the two of them, then you essentially shield your assets from that liability. And a parent company usually makes sense in that situation. So it was operating as one company with all the assets, and instead we split it out. So we have assets over here and we have liability over here so that they're separate. And then you put the parent company on top of it just to own those ownership interests.
That's good. So again, two very distinct reasons why people would want to consider that parent LLC. You heard Zach explain that to shield and separate assets from riskier activity and things of that nature, but then also to streamline the tax and reporting burden or complication if you have multiple LLCs, not having to do that individually for each one, but through the parent, you would be able to file taxes and the necessary paperwork in that regard too.
Yep. You can do one consolidated tax return for 10 companies, and you can just consolidate it all into one tax filing.
Okay, good to know.
You have to have separate bank. You have to have separate bank accounts and separate books for each company, but the tax return itself would consolidate.
Okay, yeah, that was something I was going to ask regarding the different companies. Even though a parent company does hold the subsidiaries, you called them, those subsidiaries still need to have their independent banking accounts and records.
Mm-hmm. Yep. You have to treat each one of them as their own LLC, as if they were not related at all. So, I mean, that you literally want to have a lease agreement between the two companies. You want to pay rent from one company to the other company. You want to do all of those technical and procedural things because that's how you get your liability, is by treating it as a separate company. You get your liability shield.
Okay, let's talk about then employees. So if you have a parent company and you have a really dedicated team of professionals who you would like to split across your multiple LLCs, is that doable, or should each employee be tasked or assigned to a single LLC within that structure?
No, you can do that, and as you get into more and more employees, if they're working on different companies like that, probably the easiest way to do it is employ them all out of one company, and then you set up a management agreement with each one of those. So you basically say, hey, parent, you employ these 100 people, and then charge us for however much we use it. So if I'm paid to work 25% of my time for each company, I would only get paid by one company, and then that company would essentially charge it to all the different companies.
Okay. So you have to pay attention.
It's more of an accounting function than anything.
Yeah, but it's definitely details. So you have
It's a lot of details.
Mm-hmm. Okay. All right. So you did answer this before about whether or not a parent LLC can be owned by multiple people. So we've covered that one.
Yeah, it can be. The thing to remember is that whatever the ownership of that is, whatever the ownership of the parent is essentially going to be whatever the percentage of ownership in all the subsidiaries do.
Mm-hmm. So it sounds like, again, operating agreements, management agreements, those definitely need to come into play.
Mm-hmm.
Is that right?
Yeah. You got to have anything you're doing between the different companies. You need to have some kind of an agreement in place, and it can be. I mean, it doesn't have to be super complex. It can be a very simple lease agreement. I just pay a few $100s a month or whatever, but it's important to jump through those hoops.
Absolutely.
Another benefit of the parent and subsidiaries is that it's really easy to move money around. So you can move money from your subsidiary to the parent, and you can move money from the parent to any one of the subsidiaries without any tax consequences. As opposed to if you just have two without that, then you basically have to pay yourself the money and then recontribute it. But when you're in that single member world, you can move money around a lot easier.
So again, there is that relationship between the parent LLC and the subsidiaries. And, it's all good when relationships are great, but let's say something does happen. Let's say a client, again, going back to that scenario, we have 3 LLCs and the parent LLC as the holding company. Let's say that there is a customer of LLC number 1 who has decided that they do not like how they've been treated for service, and they feel like they have a lawsuit against that LLC 1. Does that lawsuit threaten the other 2 LLCs that are subsidiaries as well as the parent, or does it just threaten that LLC number 1?
So immediately, it's only going to threaten that LLC 1. which is where you get the great asset protection from separating your assets and your operations into different companies. You can really protect your assets that way. So as a default rule, only the company that gets sued is going to be liable. The parent's not going to be liable, and the other subsidiaries are not going to be liable. But that's where the lease agreements, the management agreements, the separate books and records, that stuff, that's where that becomes very important, because you can set up as many LLCs as you want. If you treat it as though they're all the same company, then they call it piercing the corporate veil. And they'll essentially look through all that structure if you don't treat it as though that structure actually exists. So if you have one bank account that pays everything and you don't do anything for all the different companies and you treat it like you just own one company, then they'll treat it as you only own one company. But if you treat them as completely separate companies, this one does this one does this one does that, then any liability should be contained within that company.
Very clear. So let's flip this scenario then. What happens if a client or a customer goes after the parent LLC? Are the 3 subsidiaries, could they be impacted?
Yeah, so you can go after, so anytime you have liability, whoever is bringing that suit against you can go after whatever that company owns. In a parent subsidiary world, the parent owns all of the subsidiaries. So all of the ownership interests in the subsidiaries could be exposed to that lawsuit. But that's why we want the parent company to not actually do anything.
Okay.
If the parent company is just the holding company, that all it does is hold other companies' ownership interest, then it's really hard for them to have any liability, because all they do is some administrative work for the subsidiaries.
Okay.
They don't make widgets. They don't do any graphic design. They don't do any of that stuff. That's the subsidiary that does that.
That is this is why you get a relationship with your attorney, so that you can be able to ask questions and they offer helpful recommendations such as these.
Yeah. And I mean, it gives you, there's a lot of protections that it gives you from a liability perspective. It can help you with some administrative things like the tax returns, but it is also kind of an administrative burden to have everything split up. You got to remember that you have all that stuff split up and think about where all those things are, and you got to pay filing fees to create each one of those, and there's annual reports that you have to file for each one of those. So there's definitely benefits, but there's also burdens to it. So when you're discussing with setting those up, you want to make sure you're weighing the burdens of it versus the protections it gives you.
Absolutely. That's good advice too. So let me ask, I do receive questions about, I'm interested in starting a for-profit business, but I'm also interested in starting a nonprofit. And if perhaps I got a parent or a holding company, maybe both types could operate under that parent. Is that able to occur?
Yes, you can do that. It's obviously more risky when you have that set up, because there's so many rules on the nonprofit side. So if you're setting it up like that, then you definitely have to make sure that you're following all the rules and keeping everything separate, and you're keeping all of your for-profit activities over here and your nonprofit activities over there. One thing that is a little bit different is that nonprofit companies don't actually have stock. So no one really owns a nonprofit. So when you're looking at nonprofit, either ownership or subsidiaries, you're looking at setting it up as something to be the sole member of the nonprofit. So if the nonprofit has only one member, then whoever that member is makes all the decisions. So that's how you set it up. It's not really stock ownership. It's not ownership, it's membership in the nonprofit, but usually you would want to keep those separate.
Right, because there are some requirements from the IRS for nonprofits that are wanting to be considered charitable organizations or for tax exempt purposes. There's some things in the formation that has to occur for that designation to even be considered by the IRS. So with that in mind, what's your response there?
If you, yeah, I mean, if you basically have to disclose that if you're affiliated with a nonprofit like that, from a for-profit side, you would have to disclose that to the IRS. So, I mean, they're gonna keep an eye on that. It's probably more common for a nonprofit to run a for-profit operation than it is for the opposite to happen. So, for-profit company doesn't usually run a nonprofit as like a subsidiary. It's not uncommon to have, a family foundation or whatever to set up and have it just as a wholly different but somewhat related company. But nonprofits sometimes have a for-profit aspect, like a gift shop or something at a nonprofit, art museum or something that has a gift shop. The gift shop might be for-profit within the nonprofit. But again, you have to be very careful from a tax perspective, keeping the book straight on that.
Right.
Cross those lines.
And see, I hear it all the time the other way around. I want to start a company and I want to give back to the community. So I want to start a for-profit company, but it's got to have a nonprofit arm. Can I do that? And then also tying in the parent, child, or subsidiary LLC conversation on top of that. So that's part of why we wanted to make sure to have this topic of conversation so that people get an idea of what really is the difference between the parent and child LLCs or subsidiary LLCs. What are some instances that you might consider it? And what should you be mindful of if you do consider it?
Yeah.
So Zach, what have we not covered? What are some other considerations maybe that we haven't touched on that you want to make sure that people know who are viewing this webinar?
I mean, it kind of depends on what phase you're in. I mean, if you're starting up a new company, usually having an LLC is a really good start, or having an S Corp is a really good start. Getting into you don't have to be too worried about all those complexities, until you kind of get off the ground. So, having something is better than having nothing when it comes to liability protection and structure and all that stuff. So, I think these are the parent subsidiary relationships are definitely something that are valuable and can offer a lot, but there's a time and a place for it, and there's a time and a place where maybe it's not quite worth it.
All right. Well, I want to thank you so much for the time that you spent with us today explaining the differences. If anyone has any further questions about your specific scenario, you know who you can call. Martin Pringle is an amazing partner with the CREATE campaign, and they also offer monthly legal clinics as well through the CREATE campaign. They're still being held virtually until we get the all clear and the true go ahead. But every month you have access to attorneys like Zach, Danielle, and Carly, and the others from Martin Pringle who dedicate their time and expertise to us. So with that, any closing comments, Zach?
I don't think so. It was a good summary.
Awesome. Well, thank you so much again. Thank you guys for viewing, and we will catch you on the next webinar.